A company that had always been one of the frontrunners in many ways is now relatively cheap. ExxonMobil is near one of its lowest prices since the late 1980s. That means the stock is nearing a 30-year low. When you hear of a company that's proven to be reliable is at one of the lowest points in decades, that would make you assume that the company isn't doing so hot right now. Well, Marco has asked about ExxonMobil. So, Marco, let's take a look. So, the million-dollar question, why is ExxonMobil stock so cheap? We're talking the price to tangible book being valued around 30% lower than its 10-year average. A few factors are contributing to the stock price drop. For starters, the company's return on capital employed is quite low. Return on capital employed is a measure of how well a company handles shareholder money. For quite a while, ExxonMobil usually was one of the leaders in the oil industry when it came to return on capital employed. Once 2014 came around and we entered a bear market for oil, ExxonMobil gave up its lead and fell back into the middle of the pack. It has stayed there ever since. However, that's slowly starting to change. The company laid out a rather aggressive growth plan to double their earnings and cash flow by 2025. That's a pretty hefty goal. They did, though, land in an oil jackpot back in 2015 when they made their way into the coast of Guyana. So how does Exxon expect to reach their goal? Well, by putting in up to $30 billion a year to grow its upstream drilling and downstream chemicals and refining businesses. They also plan to put more attention on improving their return on capital employed score on top of increasing production. That brings us to the second factor that's dropped ExxonMobil stock, falling production levels. Well, if their quarterly earnings surpassing their expectations speaks to anything, they're well on their way to improving their production levels. The company earned $6.41 billion in their latest quarter, which is a 72% increase from the same time last year. With more drilling initiatives to keep ramping up over the years, they expect their production levels to continue to grow, including their earnings. So if the million-dollar question was why ExxonMobil stock is at a low point, the billion-dollar question is, do you buy, sell, or hold? Well, let's take a look at our charts. So we're looking at the 20-year monthly chart on ExxonMobil Corp. The symbol is XOM. For disclosure purposes, I do not hold any shares of ExxonMobil at this time. So looking at the chart, a couple of things just jump out. First of all, we had the low here in 2010. It wasn't 2009, which a lot of other stocks had a low. It was 2010, mid 2010. Then it had another low here in 2015 into early 2016, which we've seen a lot. And then the recent low here was in late 2018. And since then, like other stocks, we've had a run to this point here, and we're currently at $78.66. So we've got this downtrend here, say in the last couple of years. This here kind of failed at a second test of this low here, but it's not too bad of a failure. It's something to keep in mind, but we're definitely above the low we had in 2010, mid-2010. So it does look very interesting. So moving down here to the MACD, there is some confusion with the stock in this last couple of years or so in this time frame here. It's making some sawtooth moves up and down, and this doesn't really have a direction. So I'd like to see a direction, but we'll come back to this here in a second. Moving on down here, the histogram shows pretty much the same, as well as in the price rate of change. The relative strength, again, like all the other oscillators, is showing pretty much the same thing, and we're not going to get much else out of the stochastics, with the exception that we do have a divergence in that upward trend. The line here that I just drew is not the greatest in the world, but you get the idea. Volume looks fine. And then here into the Williams. The Williams also shows a general uptrend. So those are a couple of favorable oscillator conditions right there. Now let's go back up here and take another look at the MAC. And the MAC is going sideways here, but definitely it shows an upward trend from that low in 2015 to 2016. The problem that I see, and it's not a big problem, is that we've kind of drifted lower here. We have had this move since late 2018, but I'm kind of expecting a pullback. Don't know when that's going to happen. It may take some time, but I really would like to see a pullback before I would buy. Now, another condition that would perhaps make me buy is if the fast line did move through the slow line and if the fast line were to move up through that zero line here. We can see that in the times past when it did move above that, certainly the price did continue to run. So that's another condition that I might be looking for. I don't think we're going to get a very good bottom process like we had there, perhaps here or even here to give us the indication that things are really improving. So we're going to have to look at those secondary types of indicators before I'd say I'd throw my money at it. But keep your eye on this. Keep watching the fundamentals. And if the fast line moves through the slow line there strongly and up towards zero line, that's probably your signal. Watch the MAC histogram as well. That'll tell you exactly when the fast line crosses through the slow line. These other indicators, oscillators, will give you some idea. Keep perhaps watching that stochastic. It's getting near that midline or 50 line as well. That's another secondary indicator. And then also the Williams has already run through the midline and it's going to be heading on up perhaps to that overbought territory there between 0 and -20. So watch that. Sorry that my indications can't be cleaner, but it is a little messy in the last couple of years. So this is one that you're definitely going to want to watch those fundamentals. If those fundamentals start improving, your chart's going to improve. I'm not sure which is going to lead first, the fundamentals or the chart, so keep watching both. Marco, I hope that helps you out. So for today, that's ChewDog Charts. Thank you.